So very, very quickly, so my name is Marion Bernardi. I work for Standard Chartered and more specifically for SC Ventures. You're currently at level 17 and you're literally in the middle of SC Ventures. This part is of course our space, but also over there. Some people, Benedict, who is here and will be part of the panel, is from SC Ventures also, and probably there are some people from the team. We're going to walk around, so feel free to talk to them. Very quickly, because maybe it's not obvious for you, what is SC Venture? So SC Ventures is one department of the bank. We have been created something like 18 months ago. So usually when we say SC Ventures, people think immediately about investment. Yes, investment, but not only. We have three main activities. The first one is what we call the accelerator that exists longer and even before SC Venture. It's our platform for transforming the bank, bringing different capabilities like finding a fintech if they are looking for a fintech. It could be also design thinking capabilities. It could be also our entrepreneur program, all the things to support and help our business unit and function for the bank. So that's the first activity. The second one is the investment arm. So we invest in the startup that we know, specifically fintech because we are a bank. So when I say fintech that we know means the startup that actually we have been working with them, we're using their solution, we had a POC, it has been successful, and also they are in production or on the path to their production. And the third activity is what we call the ventures. So we consider that transforming the bank, the mindset and the culture is good, but it's not enough. So if you really want to transform deeply the bank, we need to design and create new business model. And this is this third activity. We actually generate and design new business model, of course, linked to the bank activity. So this is SC Ventures. We are not only based in Singapore, we have actually 6 different locations. We are in Hong Kong, Shanghai, also London, Nairobi, San Francisco, and I think I didn't forget one. That should be fine. Yes. And soon another one in Hong Kong because we are opening a new lab. So this is SC Venture. Today I'm super exciting, happy to host this event. It's in one particular context. It's in the context of what we call SC Venture FinTech Bridge, which is one of the platform. So if you are an entrepreneur, if you have a fintech and you want to work with Standard Chartered, you have some cards over there when there is a URL. Please feel free to use that platform to be connected with the bank. The purpose of this platform is how can we facilitate the connection between the startup ecosystem and the people from the bank who are looking for a solution. From fintech. So we share on a regular basis problem statement of the bank, but also there is a matchmaking feature where actually if you're a solution, if you're a startup, you create a profile very quickly, and based on your tech tag activities and region, we do a match with the people of the bank who potentially are looking for the type of solution you're providing. And of course, this type of event like today, we promote them on this platform. So this is SC Ventures FinTech Bridge. Today I'm really glad to host this event because ladies topic, of course, and also French tech, but that's my background, let's say like this. So really glad to host this event. I think it's a passionate topic. I think it's also passionate for you because when I see the number of people, it's pretty good. I think now it's time to probably give you your turn, and maybe you want to introduce or invite the people to join the panel, or to have a seat, or talk about the French tech first. Okay. Okay, all good.
2% of female funders, less than 10% on female investors. This is why La French Tech, Women Chapter, want to hold the 2nd edition of Dare to be Female Business Angel. La French Tech is an international movement who gather all the tech ecosystem, all the players. It's entrepreneur, leading by entrepreneur, for entrepreneur. Its aim is to develop, to set up, and to scale startups. What's a better way than to diversify and also to increase the pipe of investors? And why women? Because tech is really important for tomorrow, for our future economy, for our future education, for our future job. So this is why it's really important for women to step in and to be a major actor in this field. So let's introduce all the panel. So perhaps Alice Benzomi from Jungle Venture and, and from La French Tech Business Angel Syndicate. And also Bénédicte Nolens, board member of FinTech Association of Hong Kong, MD and COO of SA Venture. Yuet Yang Xia, founder and CEO of Growth Desk. Cheryl Ling Yung, CEO of LifeWork, founder of the 24 Hours Woman. Claire Dugmala, practice manager Maltem, business angel La French Tech Syndicate. And the last one but not least, Ling Ong, associate director, Lion Global Investors, business angel, and Ladies in Investment Club.
Hello. Yes. Hi, everyone. Thanks, everyone, for joining us tonight. I'm very excited to be here with 5 very talented businesswomen and exploring the magical world of angel investing, both from a founder point of view and also from a investor point of view. So maybe before we deep dive into all the mechanics of the investing process, if we look at the macro level for just a couple of minutes, and Bénédicte, we can start with you. In 2019, the Forbes Midas list, which is highlighting the best deal makers in high-tech venture capital, has 12 women out of 100 names. So why are we still behind, and why not more women on the investing side?
Yeah, so apparently there's tons of research that there are indeed not many women. So I started trying to get to the bottom as to why, right, rather than whether. Whether seems to be answered. It seems to be there's about 10%. That's about. So I think if you reflect on it, and having looked a little bit through what I can find through research, it actually has to do with the typical behavior of a woman to be a little bit more risk sensitive / risk averse, are more looking towards stability. I think it's also highly linked, therefore, with unconscious biases, including biases that we have about ourselves. So, as you may all know, there is it's now by now quite well known that if you ask a man whether he can do something like the next job, you will have heard that on panels, right? That a man will say, I can do that job, but the woman will typically say, I can't do that job. So I can't do that because I'm still missing all these aspects. And increasingly, people are, of course, coming to the conclusion that these women are actually missing nothing compared to the man, and in fact have the same or maybe better aspects than the man for doing that job. So it proves that with investing, if you look at some of the numbers, it's the same thing. So I looked on the internet, and there was, for example, a study done by Warwick University of a relevant sample of 3,000 women. And on average, they actually performed it's only small, but it's 0.14% higher than the males did. Then, there is this quite well-known wealth manager called Hargreaves Lansdowne. The woman there, over a 30-year period, did actually 0.81% better per annum. Now, if you accumulate that up, then this portfolio is actually worth 25% more over longer, a 30-year period of time. Then on the opposite end, though, to prove the bias issue, Fidelity did an investor survey, and only 9% believed that a woman would be better than a man at investing. So you see there is very deep bias, both from, I think, maybe the male community, or we can call, well, including the male community. But I think there's also a self-image issue that women really do hold themselves back way too much. Some other interesting data points included some data from the revenue HMRC, that is Her Majesty's Revenue and Customs, aka Tax Office. So there apparently 21% of the men hold stock versus 13% of the females hold stock. So you see, and this is an official figure, so you can't debate that. So it shows this lower figure of investment. So anyway, we can come back to all of this, but my position is that with a lot of problems in life, it is normally a false truth that underlies the issue, and normally a false truth is also what prevents change. And I think in this case it's these two. And I think once we start recognizing that, then hopefully we take more risk, we start earlier investing, and then hopefully we actually fill in for this difference.
Thanks a lot, great insights. I think, Cheryl, you've been working and helping and coaching thousands of women throughout your career. And I believe you are seeing some of those behavioral habits for women. From your experience, what's been preventing more women to joining the business angel side, and when they are actually joining business angel syndicates or doing angel investments, what's typically what's driving them? What's the outcome they're looking into? Is it more financial? Is it having a social impact?
Right, so my name is Cheryl, and I help women business leaders and entrepreneurs thrive without the burnout, to be able to do what they love without compromising the lifestyle they desire. And that's my first contact really with women founders. Why, in terms of investing, there are less women in terms of investing, and why they might be making decisions that's a little bit different. My own personal story, I'm a newbie. And the first few deals that I came across was really strange. And I asked more seasoned angels, and they said, I asked them, is there a class that I can go for? And they look at me and says, there's no school, there's no class that's going to teach you any of this. You need to jump right in and find the ones that resonate with you. And that seems a little bit strange for me, because when I talk to the men, they are like, just look at the numbers. So I think that's one of the greatest difference that I learned for women in terms of investing. Is not just the numbers needs to make sense, but that whatever that's being proposed resonates with them. So that's one. Another case that I've seen recently is I have a couple of, in the last 2 weeks, I have had some VCs who came to me, who are men, and they say, we have a wonderful portfolio, we offered this to the family officers, we presented it, it was very well, the numbers looks good, and yet she's not saying yes. Why is that so? So I think it's very clear that there's a difference between male putting in the money for investing and for female. And I think one of the fundamental could be what's resonating within them. And the second is perhaps women are looking at what is the impact beyond the financials. There's a lot of talk now around impact investing, right? But I think perhaps for women, we look at, does it impact the community that we are in? How does that happen? Does it impact the next generation? So perhaps we are seeing investment a little bit like our next few children that we're looking at, right? And where that growth might lead and what the impact might create. So those are some of my thoughts when I work with women founders. And women investors who begin to invest in them, what made their pitch sit and what didn't? Yeah.
Got it. Yvette, you're a founder, and you've been fortunate to raise money from angels, and especially women angels. When you were out in the market raising funds, what were you looking for, and how did you eventually choose to work with your angels? Was it the network? Was it purely how much money they could invest?
Yeah. I think that's a really good question because I remember when I was fundraising, and I'm speaking a little bit about my own personal experience, I pitched to VCs, I pitched to angels at the same time as well, so I could have a pretty good experience of comparing the two. And I would say that what I did then was, beyond pitching to VCs, I attended all these angel events, pitch events, and they were typically elevator pitches, right? 10 minutes, you go in, you speak. Usually you have about 30 to 40 business angels in the event, and it will be a good mix, mostly male rather than female. And here and there you have a couple of females. I think about maybe 10% of the room would be females. And I remember what we did was we did an elevator pitch, and subsequently we had about 10 follow-up conversations. And from these follow-up conversations, what we were really looking out for was, we knew that financials, funding was a commonality that every single person, VCs, angels, they could provide. We were looking for people who could value add us on 3 fronts. We were looking for people who have exited companies before, i.e. former founders, so they knew what it was like to actually start a company, grow it, exit it. They knew what were the challenges that came with it. We were looking for people from the same industry who knew what the industry needed and so on, so we could tap on their insights. And then the third one was we were looking for people who could just generally give us, good network, right? Access to different people, different potential partners. And just through conversations with about 10 different people, we actually identified 3 people, and 3 of these angels are actually females, interestingly. So perhaps I'm a little bit biased, but somehow I ended up with 3 female business angels on my shareholding table. Now, out of these 3 female business angels, one of them was a former founder, grew the company from scratch, exited the company, and till today is a very valuable member, a board member of our company, because she could share with us things like, how do you actually grow a company? What are some of the challenges that every single phase? She is now very plugged into the tech scene, so she actually connected us with all the investors from the subsequent rounds as well. Then the second angel came from the real estate industry, which is a segment that we were very much focused on. And because of that, we had access to a lot of different people from the industry. We could tap on their network. And then the third one was actually quite interesting. She started out really being someone who was quite, I would say, industry agnostic. She was very experienced as a professional. But we took her in because we felt that she was someone who really resonated with us and our idea. She has since then introduced a number of different clients to us, some of which are our biggest clients. And she actually decided to join us on a full-time basis as our business development director. So she really believed in the idea. She started out in a very informal basis, just referring clients to us. And now she's actually our business development director, helping us, really bridge new conversations as well. So I've definitely gotten a lot more out of these conversations. Instead of just funding, I've actually even gotten new team members as well to help us grow the company.
And would you say that pitching to women versus men was also different, just the pitch itself?
I think the differences are actually very nuanced. So sometimes people think that women don't ask the heart crunching numbers. Actually, that's not true. I think every savvy investor that we meet would ask you the same questions, right? They will ask you, what's the market size, how fast have you grown, what kind of traction do you have, what kind of product market fit do you have? These are questions that, regardless of gender, they're gonna ask you. But the one thing that I do realize is that when I go to meetings and there are females in the meetings, more often than not, they will actually ask me a few other questions. So some of these questions are things like, what is driving you to start this company? What caused you to start it in the first place? What is your mission, right? What is your motivation for really running this? What is your objective? What is the end goal for this company? What is your thought process when you have problems, right? So they really try and spend quite a lot of time, I would say, to try and understand you as a person, your values, your morality. How do you approach very, very challenging situations where, say, for instance, everyone in your team is going to leave? And because they spend a lot of time trying to understand this from the founder's perspective, the kind of conviction and faith that they will have in you as a founder is a lot more intrinsic, so long as they're aligned with you in terms of your framework and your thinking. But if they are aligned, I do find that they do have a lot more conviction in you as a founder than just heart-crunching numbers, basically.
Got it. Claire, Ling, you're both part of Business Angel syndicates, and we'll discuss a bit more about how a syndicate works. But Claire, I would like to start with you, since you're one of the newbie angel around tonight. What's been driving you? What's your story about behind starting to invest your personal money in someone else's startup?
Yeah. So as you mentioned, I'm a newbie. And actually, everything started with my professional company. So 2 years ago, my boss, so I work for an IT consulting company, he came to me and he said, Claire, we should invest more in startup. I have an idea on a new offer on tech for equity. And I would like you to assess the market. I have to say that I was pretty excited because actually, startup, super interesting topic. But at the same time, I have to admit that my knowledge in this area was very low. So I did my work. I started to study. I did some research. I tried to understand the life cycle of the startup from the seed, Series A, Series B, Series C, till the IPO. Who are the players? What are they looking for? And then I discussed also a lot with entrepreneurs in order to understand their needs. The more I met people, the more I realized how huge is the market, first, and also how risky is the market. And so having a figure in mind, over 10 startups, only one is going to succeed. So it means that you are more likely to invest in a startup which is going to die. So how can you avoid that? I was pretty convinced, like you, Cheryl, that for starting, I should do real investment. It was the best way to learn. So I set up my objective. First, learning. Second, lose less. And maybe being profitable. And the last one, invest in projects that make sense for me. So usually people come with the question, how much, Claire, for starting? I can't say so much. I don't have any magical formula, but what I can say is usually a startup at the seed stage, they are looking for an amount between 500 to 1 million. And I saw that the experienced business angel, they start their ticket size around 50. And so as a follower, if you come with a ticket size around 10 to 15, it's interesting. And so I would like, at that time, I wanted to spread my risk. So I have an idea that I should create a portfolio. So for the first year, I wanted to invest in 3 startups, and over the year, I could have something which could be interesting. And yeah, that's it how I started. But then you need to find a startup. And this is another issue.
Yes, and maybe Ling, you can touch upon that and how a business angel syndicate might be helping you to actually source deal.
So, on the personal investing side, I'm a member of LIC, which does the business angel syndicate investments. Now, it's quite interesting because the number one tenet of being a professional investor, I'm a professional investor in public equity for a day job. So the number one tenet of being a professional investor is diversification. And I think your investment club allows you to diversify in many different facets. First of all, if I look at LIC, we bring to the table a very wide variety of skill set. So when we were talking about the due diligence process earlier, so I myself, I sort of look at the numbers. I crunch the numbers like just as much as probably any guy, probably more, do, right? But some of my fellow investors or fellow investees, they bring to the table stuff that I have zero experience in, right? I've never run a sales and marketing team. I've never started my own business. I've never had to do HR operations. I've never had to think about, the operational aspects of running a business. And they ask questions in those respects which a pure financial investor wouldn't ask, right? So you're not just diversifying, like you mentioned, the financial risk, which every investor knows you need to do, but also you're diversifying your skill sets. And then we talked about, I think Yuet talked about networks and what and what she looks for as a founder from an investor. Money everyone can provide. Capital is really cheap right now. LIBOR's down. So, I think it's the connections and the network that each one of these investors bring to the table. Like, I can introduce them in later stages to, more serious VC funds. I can, link them up to companies that I speak to daily. Other people can link them up to sales and marketing side, consultancies, etc. So the more people, it's like the power of being part of a club, any club. The more people you have, the value of that goes up exponentially. So I think that's the beauty of being part of an investment club.
And technically, how does it work? Like, you're funding a startup, but how is the syndicate helping you, from a legal kind of framework? Are you investing directly in the company, or are you investing via the syndicate, and then the syndicate is kind of representing you to the startup?
Yeah, so I think each syndicate probably works slightly differently, so you've got to look at the T's and C's. But for our syndicate, there'll be a lead investor, one person who truly, believes in that business, and usually the check size is also a bit larger than everyone else's. So the rest of us who might believe in the business, but we either don't have time, or we've got other commitments with other businesses elsewhere, we'll follow through, and that lead investor will be leading the due diligence. Everyone gets involved, but that lead investor will liaise with the founder. And that's one advantage for the founder as well, because whether it's VC, at whatever stage, CEOs are busy running the company. You want them to be focused on the company. You don't want them to become IRs and spend time talking to 101 investors. So, the quid pro quo of that is a lot of the time they're looking for check sizes in the hundreds of thousands. Otherwise, you're wasting their time. But, a single person might not want to, or might not have a few $100,000 to invest in a single company and put all your eggs in one basket. So that's where having a lead investor that they can speak to, and that lead investor is then responsible to pass that message on to other investors, collate their feedback, and go back to the founder. Yeah, so it streamlines the process. But it also, at the same time, hopefully does not detract from the value add of having many advisors in that sense.
Got it. And Claire, your second deal was not through the syndicate, right? You did it on your own.
Yeah, actually, I'm also part of the French Tech Syndicate. So I did my first investment through the syndicate, and the way we work is quite similar to LEAK. So we have a lead investors, and people gather around this person, and then we join the deal. And actually, it's very efficient because you can benefit from key expertise. Within the French Tech Syndicate, we have professional business angel, people from venture capital. We have also people from private equity, but also serial entrepreneurs. And like me, people from marketing or product design, from tech. And so when we do the due diligence, all these competencies are really useful to look at the deal from different point of view. For my first deal, I went through the French Tech Syndicate, and actually the lead was very useful because he had a background as a lawyer, and he helped us to clear all the paperwork. It helped us to make sure that our investment would be well framed. And actually, he helped also the founders to review all their previous contract. And so for me, as a newbie, it was quite useful. It built my confidence. And so for the second deal, I knew from the previous one what I can expect. And so I decided to go alone. And I really like the idea of the product. So I invest in a startup which do certification of diploma on blockchain. But eventually, when we were addressing the paperwork, I decided to hire a lawyer in order to make sure that all the contracts were fair to me. So you see the difference in that.
You have to be more involved if you're doing it.
Definitely.
You can't just be piggybacking on someone else doing all the hard work.
Yeah.
But it's actually interesting to start building your portfolio with having, like a smaller ticket size, knowing that someone more experienced is actually helping you along the way. And then as you graduate into, you know, a more experienced angel, you can start doing it on your own.
Definitely, yeah.
And Cheryl, you've also done a few angel investments, right? Are you, you know, is when you look at a company, and actually the question is for all of you, right? But how being a woman makes a difference? You know, does it actually make a difference in the way you source companies, in the way you interact with them post-investments?
I would say my very first one, I wasn't as smart as Claire. I went on it alone, and when they sent me the documents, I was like, oh my God, what is this? What does this term mean? You know, and all those things. And I did have to spend money on legal, all right, just to get the first round done. But I've also, a fair bit of my portfolio does not land just on tech. I've invested over the last 2 years in publishing, because publishing has gone through disruption and they are ready with a new business model. I've invested in podcasts. So mainly my idea was new media that's coming up, because if we want to shift, for me, it's a little bit of a personal agenda to shift the mindset and the social thinking around women business leaders and founders and women investors. We need to shift the narrative. And part of shifting the narrative is getting into the new media to get people to talk about a different narrative. And I'm very pleased that one of the publishing platform that we've invested in, we now have 1.8 million millennial women on it. And that's shifting the narrative globally. So for me, making the decision, it's not about the money, what's the returns, but really what's the social impact and social change that drives me to invest in those platforms. That is perhaps not a very regular like med tech or education tech kind of platforms, yeah.
Got it. And Benedict, we've talked a lot about angel investment, but what are the other, you know, solutions for a woman who wants to diversify her investments? How can she get more involved? Like, you know,
yeah. So I think, honestly, angel is the most difficult of them all, but I was listening with much interest to what you guys were talking about, because having that assistance of a group is actually really, really very good. So the reason angel is the most difficult is because people can say as much as they want about the numbers, but the reality is all these numbers are hypothetical. So I have tried on several occasions, and ultimately you just have to make a jump, okay? You have to be willing to jump. And I think that that's easier if you're jumping together. Secondly, I think that's easier if you have experience jumping. So yeah, and let's say therefore, also inversely, it is easier if you've taken a lot of other risk in your life. So let's say if you haven't taken risk, then start with the easiest first, which is, in my view, well, the very easiest is collective investment schemes, right? So and ETFs, that simple stuff. These days you can just sign up to Interactive Brokers, Saxo, and you're totally self-directed. You have beautiful comparative charts, and you could just push, I can put my trade here this very second and it's done, okay? So this is already very important what I explained to you, because let's say 20 years ago when I started my career, you had to have been lucky enough to have your account with Goldman Sachs or Morgan Stanley, and otherwise you got nothing done. Now that we're way beyond that time, all of this is democratized. It existed in the US in the form of Charles Schwab, but Charles Schwab did not expand a lot in Asia. So really Interactive and Saxo took that market niche, you could say. So I would say that's the first start, is at least have some ETFs in your portfolio, because otherwise I think then you fall below the even 13%, right? So that's kind of underperformance. Secondly, there is a lot of robo-advisors these days. They can give you actually portfolios of these different things. That might be interesting to you because you can choose tech exposure, you can choose ESG exposure, and it's all automated. So you just need to sign on to one of these systems. And of course, being here in SC Ventures, digital advice is something we're exploring as well on our side. And then the next level of difficulty up, I think, is now these crowdfunding platforms. They allow you to have access to early stage investment, but of course the risk is high, and it is indeed a failure rate of 9 in 10. That's the official figure. So you just have to be willing to do that. But I would say they're similar to your syndicates in that you can see how many people have already invested. So if you like the business model and you see that already X number of people have invested, you should be relatively safe. The other thing that exists, which is really, really interesting, is secondary is platforms for secondary trades of private shares. That exists in the United States. I think you could sign up probably from offshore. And these are interesting because these are typically the employees of the tech startups who actually are selling their shares. Now, it's again not riskless. It's high risk depending on when you're buying it, but it's still interesting because it's a pre-IPO purchase. So I think there are so many different methods really to make investment, and I think it is about exploring all of them rather than just one of them. And I agree with everything that was said. I mean, it is still about putting your eggs in different baskets as opposed to in one basket, right? You need to know what you're going for.
All right, thanks a lot. I think we're a bit running out of time. Shall we take a few questions, or we're just, yeah, okay. Let's open up to the audience. No question?
Thank you. I would like asking the investor here actually. So how do you get started? I mean, from the first steps, because I believe the audience here as like I'm an entrepreneur myself, so I'm interested to turn myself into an angel investor, maybe later on stage. Yeah, so I would understand like how you get started. Like people like us, we have no idea, but I did attend a few like pitch, right, the angel investor pitch, but I didn't invest in anything because I have no idea how should I get started.
So I will leave it to the experts there, but I think that what I found is useful is, of course, first of all, reading up on the news. So I can tell you one example which kind of does make me a little miffed, but I tried to invest in one startup, and this lady really didn't, she kind of refused, and I had such high conviction, and yesterday came out the news, they've raised 20 million from Tencent, okay? And this was 2 years ago, so if I had maybe insisted more, I could have invested very early stage. So that's important. If you don't pursue your conviction when you have it, you're going to regret that as well. Now, in my case, I think I tried sufficiently, and she was really, honestly, extremely hard to deal with. So, you know, that comes to the question of, do you need a good relationship with the founder? Maybe that's something I want to ask you, actually, to react to. Secondly, though, another place you can go hunt is at the startup festivals. Actually, startup festivals are very useful. So if you go to the booths of the pre-series A, that's where you can really see a lot of competing business models, and you can say, I like this one and I don't like that one, and then you can just ask, are you raising money? I think it's very important to ask as well, because they might not tell you that they're actually wanting to do a pre-seed or a series A. You have to ask. So maybe I throw that question at you. What do you think? Like, Mike is there? So I said I tried, but
I think for founders as well, in a way, you know, especially if you're a new founder and you're raising money for the very first time, you don't really know what to expect. So often what you do is you have other friends, right, who are founders, and the tech community is quite tight-knit, right? So people tend to ask other founders, like, what was your experience like, you know, raising with VCs? What was your experience like raising with angels and so on? And sometimes, you know, generally the feedback is always really good, right? But sometimes it's those little small horror stories, right, that sticks to you. And, you know, even if it's just 1 out of 10, right, it really sticks to you. So sometimes founders get a little bit worried as well, because anyone that they bring in, you know, we start getting a little bit like, you know, worried, like, is this person going to be like one of those horror stories, and usually all those horror stories, people will say that, oh, it started out so good, and that I don't know how it went so wrong, and so on. So I think that's where founders are coming from in many ways. We know that this is a little bit of our baby, that we have poured our life into it, and we just want to make sure that anyone that we bring in is actually the right fit for us. Yeah, I think that's one. And it's not always the case where we make the right decisions, of course, where sometimes we miss out on potentially good investors like yourself. Yeah, but sometimes it's really just, through that very limited interaction and conversation that you have to sort of make a judgment call. And it's actually very difficult to make that judgment call within the 10, 20 minutes after the elevator pitch. Yeah, so I think it's possibly not the best sort of structure sometimes. So it's just very case by case.
Okay, I'll add to that. I have like 5 under my belt right now, and often I don't make the call very quickly. I take time to discover and get into a deeper relationship of finding about the business model, who do they serve, and how do they make decisions before I decide. And if you want to get started, start small. Like what Claire says, have a lead, and then you may be the one that's following behind between 10 to 15K, and then you get started from there. You have to get started so that you get into the rhythm and you jump, because after you do your first jump, the second one is much easier.
Hi, just interested to know from actually all of you the importance of mentoring or being a mentee, and secondly, whether or not, if you are in a mentee relationship, is that person also a woman?
Do you want me to take that? Okay, a little bit of a conflict of interest, because I am also a coach for women business leaders and entrepreneurs, but I do not coach the people that I have invested in. Because one, I'm very aware of, is there a conflict of interest? Is it really an open relationship that can really share? Because I am also investing in it, so I don't do that. But because for me, as a founder, I've also received mentorship from others who have poured into me, and that's one of the reasons why I'm giving back to women founders, because somebody believed in me and gave to me, so I'm giving that. So when I mentor right now, I mentor across male and female. We have a standard kind of process that we bring them through. And when we do a group mentoring, there is a comfort level, because again, we don't put people with the same industries together, but their solutions are cross-fertilized, so that's interesting. So personally, I don't mentor those that I invest in. I do outside, but I am open to male and female. I don't think there's a difference. A business is a business, but I think there's something interesting around life stage versus business stage. Life stages of women and men in the different stages in their business. There is a little bit of a difference in that perspective.
Okay. In my case, actually, I have a mentor, and it's a man. And I think that I choose him based on his experience first. He used to work for a VC, and usually when I want to move to a deal, I always request his point of view.
So, I mean, in the business angel side, I don't think there's like mentoring per se, but I was going to say that what I do try to do for the businesses that I've invested in is provide them network and contact. So if the founder's looking for a contact in a particular field, that's something that investors can provide. Outside of that, though, I think in terms of like a work mentoring thing, then yes, I mean, I don't think it makes too much of a difference for me, at least, whether it's a male or female mentor.
Hey, hello. I have 2 questions. One is, I also try to invest in some companies that I'm interested in, but every time when I ask oh, how much are you looking for? The number that I got is really big, then I just give up, right? So I don't know how should I estimate the amount they're asking for and the share that I'm going to get? That's the first question. And the second question is, yeah, so I have some friends who also have startups. Then, like, let's say if I invest in them, but I'm a bank employee, and they ask me, can you share some contacts? Can you make some connections? I don't know whether there's any conflict of interest. Like, yeah, I don't know how to gauge that. So these are my two questions. Thank you.
So on the sizing question, I guess yes. As we said, CEOs have day jobs, so they don't like to deal with tiny investors. But that's the huge advantage of investing with a club, because you can share the risk. And then on the question about conflict of interest, best that you ask a lawyer. But as far as my employers have been concerned, so long as I make it clear that it's for a personal thing, you meet someone, you just say, would you like to meet so and so who happens to be in the same industry as you? I think there might be some synergies between you two, and then it's up to them to, so long as you're not providing private information about your company or contacts that are exclusive to your company, then I think that's probably okay. But just check with your compliance officer.
I think the only addition I'd make to that is there a financial arrangement? Right? So are you receiving?
I never take any commissions.
But in this case, are you receiving incentive for providing those connections? Because if you are, then you've got a compliance problem.
Hi, this question is more for the institutional investors. As an angel looking for, I guess, the next big unicorn in Southeast Asia, it's often very difficult because, say, the software innovation comes out of the US or Israel, other centers. So for the institutional investors in the room, what do you peg as emerging verticals where Southeast Asia can really be a global leader?
I think I might be the institutional investor in the room.
Yeah.
So I'm putting my jungle venture hat then.
Yes.
Well, so if I look at our kind of investment thesis around Southeast Asia, we're definitely seeing that on the, in the B2B space, there's a lot of room to actually build a lot of global tech leaders that started out of Asia. So in our portfolio, we've got companies in the RegTech industry, cybersecurity, software, design software, and all of them started here in Singapore or in Southeast Asia, and they've expanded into the US or Europe. So there is definitely space for that. At the same time, it's true that most unicorns in Asia were on the B2C side. So definitely hunting for the next big one on the B2B space as well.
And just another question. So how do you deal with the dilution risk over time? Because, I guess it's small tickets. Yeah, exactly. It's very tough. So small tickets add up to a lot, and then it's almost like a timing game. But yeah, interested to hear.
So, and I think this question actually is also for all the, the angels in the room. I think when you look at your investment, obviously there's a diversification element, but you also have to think in terms of, that's a long-term commitment. You may invest at the angel or seed round, but actually, if everything goes well, the company will be raising more money. There will be a Series A, or Series B, or Series C, and who knows what. You may not have to wait until the final exit to sell your shares. There might be some opportunities for you to sell, your equity at the Series A or the Series B. And it might still be a very good investment for you, right? Because you came in very early. But definitely, you will get diluted. But, if everything goes well, you will have a little less of a bigger pie. So that's kind of how it should play out, right? And it's the same for a VC, right? Coming in at a Series A, then you'll get diluted, but, hopefully the valuation of the company gets higher.
Sorry, I'm hogging the... Okay, last question. So just on the first point, so when you're looking at, say, these RegTech companies, these great B2B companies that are coming out of Southeast Asia, how do you analyze it versus what else is going on in the rest of the world? Because, I know you put maybe 90% of the analysis based on the founders and the strength of the founders, but then if you're looking at from a technology angle, Are you guys literally scanning the globe and doing a global comparison, or are you, just like how do you look?
Yeah, we're definitely looking at what's the tech angle and how a local company is different from a global players, and where depending on what stage you invest in, you may already have a lot of customer traction and proof points. So as a financial investor, you don't have to do a whole technical diligence. You can also leverage what their customers are telling you. And we're actually doing a lot of customer calls. And I think everyone doing angel investment would also spend time doing a lot of due diligence, including talking to customers and trying to understand why they're paying for a solution and why not using a US or Europe company.
So two quick questions. It was mentioned a while ago, founders might talk to both angels and VCs at the same time when they're raising. Is this typical, or would you more typically go to one over the other? And second, do angels in Southeast Asia typically get follow-on or preemptive rights, or more typically not? I think I typically see it most of the time, but wanted to ask.
Maybe I'll touch a little bit on the founder's perspective. Usually when we are fundraising, depending on what size you're actually fundraising or which series you're at, if it's early stage, for instance, typically you would try and speak to all the early stage VCs as well as angels at the same time. And it's much easier to have conversations with VCs because at any point or any particular series, you actually know who are the list of names that you can actually speak to. And the names could be maybe 5, 10 different VCs that you would definitely have conversations with. It's also much easier to, in a way, door knock with VCs because usually you can find their email addresses online. You can find there's maybe even an inquiry form that you can actually reach out to them. But angels, on the other hand, is a little bit harder because I remember 2 years ago when I actually did our very first round, when we were first starting out, I didn't know of this angel events, right? And it was by chance that I actually did attend one because I met someone, had coffee with me, and they said, hey, do you want to come and pitch to this event? Without meeting that person for coffee, I wouldn't have known about these events, and I wouldn't have had the opportunity to go in and do an elevator pitch. And if there was no such events, it would also be equally impossible, I would almost say, to actually find the right angels in a sea of amazing business angels because you don't have that much time to go and speak to maybe 20 people, 30 people. But this elevator pitches, of course, makes a lot of sense because you bring 30, 40 people into a room and you identify those who are best fit for you and your business as well. Yeah.
All right. I have a question with regards to selecting the right syndicate. What are 3 good questions or that would pose as the top 3 assessment criteria for you? From the investor's perspective, like few of us have access to like Sugler's angels, Facebook angels, etc. So what determines a good fit?
So I think it really depends on your purpose and what you're comfortable with. So different syndicates have different thresholds. Some have minimum investment sizes. Some have minimum number of investments you need to make. Some have upfront commitments. Some of them specialize in particular areas, ESG compliant, ladies only, like Lick. Doing a little pitch there. And yeah, so it really varies. I think there's no one size fits all. It's up to you what you're comfortable with. And I think tying back to the other question about how do I get started, I think someone else asked that question about how do I get started, how do I think about a portfolio. I mean, being a fund manager myself, I think of it in a portfolio fashion. How many investments, yes, you need to take that jump, but before you take that jump, plan, after you jump, what are you gonna do? Are you gonna swim, or are you gonna fly, or are you gonna float, right? So how many investments do you plan to make? How much are you willing to lose? What can your family afford to lose? Because the stats are there, right? 9 out of 10, and that's in the best case scenario, assuming you actually see 10 deals. In some syndicates, you might not even see 10 deals in 1 year, right? How many frogs and how much time and commitment do you have to put to this as well? Because there are a lot of frogs you have to kiss before you find a prince. We go through a lot of deals, and most of the time I look at the pitch book and I'm like, oh man, this person didn't even put any effort into the pitch book. Or, oh, I've seen this idea 10 times over. I'm not sure which one actually will succeed, so I'm just not going to look at it. So think through these issues and question to yourself, like, how do I plan to build this portfolio And how much do I have to commit? If it's $1 million, well, am I going to allocate it to 10 investments, 20 investments? How much? And then do I then meet the minimum criteria for this syndicate? Because some syndicates might say, oh, you need to invest each deal 50K, right? Does that fit with your portfolio framework? I hope that helps.
So as I said before, there is also the alternative of these crowdfunding platforms, right? So in Hong Kong, there's one called Angel Hub. Now, because of the regulation, you do need to be a professional investor, which means you have to have liquid assets of $1 million. And liquid means beyond your primary residence. But once you've passed that threshold, you can invest, I think the amount is more like 10,000 US. So you don't need to your point of sizing things up. The nice thing is on a crowdfunding platform, it's all transparent. So you don't need to feel bad asking what they're looking for. You don't need to feel bad when they tell you a figure you don't have. It's all there. So I think that's really an advantage. And I think to some of the US platforms, to be frank, you can actually sign up to these. And it's actually, you can even sign up as a retail investor. So you don't have this threshold that exists, for example, in Hong Kong. So I think that's maybe a stage easier still, it seems, than to be an individual angel or a syndicate angel, maybe because the threshold is quite low. Yeah.
Thank you so much, panel speakers, for your sharing. My name is Sabrina Ho. I'm the founder and CEO of Half the Sky. So Half the Sky is a career platform for women. It's a self-funded startup at the moment, and we have several angel investors approaching us. So from my point of view, I want to know, how can we choose the right angels? And maybe Yuan can share with us a bit more about the horror stories that you experience or you know. That would be very helpful. Thank you.
So personally, I think I'm quite lucky. I've never experienced any horror stories. And actually, even in pitches, when I speak to angels, I've only gotten advice and good, valuable input from them. But I am part of a group of founders and so on that meets up, and we talk anonymously about problems that we face. And I have heard of stories where, of course, things didn't work out as well. For instance, it's quite common for tech companies to pivot. So maybe the first time round, when you raise money as a SID, you perhaps communicated a different idea. So people may have invested in you with a different idea. Midway through, because of a variety of reasons, could be market forces, could be different environment, or so on, you found a different, better idea, so you pivot. But this may not necessarily be the same thesis that someone else has invested in you with. So subsequently, perhaps the person wants to exit the investment or whatever not, this could potentially create conflicts. And it depends on how all these conflicts would turn out as well. But in general, I would say that, to your question, how to select good angels, I think quite similar to how the angels actually assess the founders as well. A large part of it is also whether or not you feel that you resonate with that person. So of course, from the perspective of a founder, we're there to do the sales pitch, right? We're telling you about our business, why we think there's so much potential, because that's obviously something that we pour our life and sweat into it. But of course, with the angels itself, usually it really boils down to a few things. Do they align with the way you think when it comes to running a business? Because sometimes angels may want you to grow at maybe even 20, 30 times, but is that something that you truly believe in? Do you believe in, for example, sustainable growth or just growth for the sake of growth, for instance? So depending on what your values are, you would want to find the right set of investors who are very much aligned to the way you actually think about your own business, because it may actually create conflicts down the road. So it's better to sort of thresh out some of these conversations early on to really know whether or not you're on the same page about how you think this business is going to grow early on, and then rather than at a later stage. Yeah.
So my perspective is when I choose my investors in some of my own businesses is what else do they bring besides the financials, right? I think a lot of it has to be, for example, if we were to scale, do they have access to networks or people that we can talk to? Or do they already, at different stage of our businesses, are they able to help us, for example, in operations, in in finance or in technology that's needed. So for me, when I started the podcast network here in Asia, it's like, people tell me, there's no money in that. What is podcast? In Asia, we are too fragmented. So I had to find people who believe in podcasts in the first place. And the second thing is able to help me scale podcasts as a platform. So those were the things that you need to look maybe 2-3 steps ahead than just what you need right now, right? And if you are looking at global, then you need to look at what's next. Yeah.
Thanks a lot, everyone, for your time. Sorry, I have to speak in the mic. Thanks everyone for a great insight, and I hope everyone get what people were looking for. And obviously, you can reach out to our great panelists tonight if you have further questions. I think, Amel, you want to highlight what's coming next with Women French Tech? Okay, while we're figuring that out, what we're planning to do is to host a bunch of workshops around the business and the legal due diligence. So if you are interested, please leave us your details. We'll be giving you a link where you can give us some feedback around the sessions, key questions you have, and if you are interested in kind of embarking in the angel investment journey and taking part in our workshops. It's going to happen in October and November, most probably. And if you have just a few minutes to give us some feedback using the Menti link.
So can you go to menti.com, please? And the code is